hope we're good. Guys, can you see it? Can you see me? Please say yes or hi in the chat box. If you can. Hey guys, what is up? It's Dusty here, and welcome back to another crypto live stream. And today, things are interesting as always, because we have the Fomc meeting. We're gonna get ourselves a couple of key numbers today. Actually, I believe earlier we already got ourselves some juicy numbers just to give you guys some idea. Today is the 1st of February, and at around 8 p.m., aka in about 33 minutes from now, we're going to get the Fed interest rate decision. It is expected to be 4.75%, meaning an increase of 0.25%. About half an hour afterwards, we're going to be getting ourselves the Fed press conference, always at 8:30 p.m. You can change this if you want to your time zone over on tradingeconomics.com. And as I said earlier, today was a pretty important day. We also had ourselves the inflation numbers over in Europe. That was something we were watching out for. And yeah, I'd say the next couple of days is going to be extremely important overall. Tomorrow we have the Bank of England interest rate decision and ECB interest rate decision. So for over in Europe, another press conference from that. We might actually go live for that as well if we find the time. I believe the day afterwards. Yeah. So on Friday, we have the unemployment rate numbers coming out in the U.S. This is also always crucial for stability. And then over on Monday, I'm not sure exactly if there's anything very important happening next week. It's the start of February, but in terms of like announcements or so, I guess the first very important crucial thing is February 10th with the inflation numbers over in China. But that's still a little ways away. So as that gets closer, we will cover that for sure. For right now, though, you understand what's most important. You understand what's in front of us. And welcome back to the channel, guys. Everybody in the chat box, make sure you just quickly say like where you're watching from. Whoa, we have new colors. That's a new thing. I didn't know that was a thing. If you don't know what I mean, take a look right there. We have colors from people in the chat now. Do you guys choose your colors, or is this like randomly? Is this like to imitate Twitch, or what happened right here? I've never seen that before. Is it also for you guys? Can you also see the colors like this? And if so, is there any reason why these colors are this way? But anyway, welcome everybody. It's always nice to see you guys all in the chat box. It's always amazing. You guys don't see it, huh? So what does this mean then? Maybe how long you've been subscribed for or something? Just quickly let me know, guys. Do you guys see these colors as well in the chat, or is this all just the same for you? No? Oh, maybe you have to update YouTube. Maybe some people will see it and some people don't. No idea. No idea. Yeah, but like I said, very crucial numbers coming out. I even put an alarm out, just to make sure I didn't mess up. Just to make sure, right? Because you don't want to miss this. Usually what happens, and I've actually had one of my friends, one of my good friends in crypto, he actually had a nice little bookmark. Let me show it to you. Oh, no, I didn't bookmark it. Let me just type it in real quick. There we go. Yeah, guys, I bought so much new stuff. You saw the new microphone, right? I have a new little interface thing. I bought some new, some new because it's cool lights. I need to have this. And of course, you need lights on this thing as well. Why? I don't know. New MacBook, the 16-inch M2. We have another MacBook here, which is now not used anymore. Another one, MacBook Pro. We have the screen, and we have a couple other screens next to this 49-inch screen. Things are good. Let me type in what I was looking for, and then we'll talk about that. Yeah. What I wanted to say was that we're preparing for some crazy things in the crypto space to happen, and we need to be prepared for that. We need to be prepared. I've told you before. Here's one of my friends' his analysis on the matter. At the December meeting, we saw a pretty big spike slightly beforehand, before falling down redonkulously right afterwards. A similar thing happened in November. Pretty big rise as the meeting came along, and pretty big dump right afterwards before continuing towards the upside though. So the aftermath is very hard to say. It's about that initial burst, and we're seeing that right here as well in September. An initial crazy burst before a crazy drop down slightly after the event was basically over or happened, depending on how you want to view it. Let me quickly share the stream over on Twitter and over on the Telegram as well. And everybody, if you're enjoying these or if you want to help out, make sure you press that like button. There we go. There we go. Let me quickly share it here and share it over on the live. There we go. Oh, wrong one. There we go. We're live. Come check it out. There we go. All right. So, in the midst of waiting, I have looked through countless articles, guys. You do not want to know. But there's a couple interesting pieces over on Twitter. For example, the fact, interestingly, that a Tesla lost $140 million on Bitcoin in 2022. That was interesting. If you guys are aware of the library versus SEC case, talking about crypto regulation, things were very interesting in that one, as apparently the price of library coin pumped right after a new verdict was made by the judge. Apparently, Twitter might be preparing for some takeover of tipping. So they basically got rid of a Dogecoin-related account that was good for tipping over on Twitter. They got rid of it. In terms of Polygon, and I'm covering all this in another video coming out in a couple of hours. I've already recorded it, but I did not publish it yet because there were some mistakes, needed some additional editing, and so it's going to be published in a couple of hours from now. Apparently, Hamilton Lane, a huge investment firm, is actually going to be coming onto Polygon with their $2.1 billion fund. Very big news. A $1.something billion options expiry is happening this Friday. You can check it out all the time, or always, I'd say, over on Deribit. That's surely the place you can check it out for if you want to, in terms of options expiry. I'm just quickly letting you guys in on the news that kind of circulated right now. We had some interesting news regarding FTX. So let me tell you guys this. I laugh so much when I see Sam Bankman-Fried and the things he's trying to get up to and whatever the guys in that company are trying to do. So right now what's happening is they are literally trying to get money from Voyager. And not a little bit, no, $400 million. They're trying to get from Voyager. How or why, you might ask? Well, they claim they had the rights to it because of loans and whatnot. And Voyager says, well, you lied about so much, we don't owe you anything right now because you made us lose so much money. And in the similar, I guess, time frame, the judge has also now all of a sudden said that Mr. Sam Bankman-Fried should be stopped from contacting his ex-employees on various places, like, for example, Signal, because that guy was trying to text his way out of some or into something. I'm not so sure exactly how to phrase that. Yeah, pretty interesting to watch for sure. Let me also quickly see if you guys are still in the chat box. Everything is still good. Yeah, so we have about 20 and a little bit more minutes until the numbers comes out. What time is the announcement? 25 minutes from now. And again, there's no such thing as pump or dump. It's literally a luck of the draw situation. The only thing is, if you get it right, you can make a huge amount of money in a slight little bit of time. But I'll get you guys in on a little bit of the, let me quickly grab it to you guys. So there's been some expectations, obviously. And let's see, where is my source? I have like 50 tabs open, so I'm not sure which one it is anymore. Okay, here we go. This is the right one. Oh, I need to turn off the ad blocker. It's already off. I never get that. It's like, how? What do you want me to do? It's unblocked. My ad blocker is literally not on. Wait, block me again? No? Fair enough. Okay. So here's everything the Fed is expecting to do in about 25 minutes from now. Markets have priced in a near 100% certainty that the Fed will announce an interest rate hike of only 0.25% when its meeting wraps up today. But the focus likely will be more on Chairman Jerome Powell, who could push back on the idea of a looser Fed later this year. He's on a very tight monetary policy tightrope where he can't allow the market to think this is the end game, said Quincy Crosby, chief global strategist for LPL Financial. This week's Federal Reserve meeting will be remembered more for what policymakers say than what they do. And the main reason for that comes along with the fact that we all know that these rate hikes are going to decrease in terms of intensity, but increase in terms of longevity, meaning they'll increase the amount of times they're going to have to increase this for, but most importantly, just hold on to this higher number for a longer period of time. Hence, we're watching what exactly are they saying about the unemployment? What exactly are they saying about this landing that they're expecting? And how long is it going to take before things get better? The actual height of it, the actual increase, in my own opinion, and many economists alike, doesn't really matter as much anymore, as we've already gone from these extremely low points to 4 or 5% levels. These are extremely high. And for that reason, we're wondering, okay, so how long exactly is it now going to stay at this higher elevated level? And so we're going to have to kind of see what they say, not as much what they do, albeit 0.25, albeit 0.5. Regardless of the increase, it's already ridiculously high, and the percentage-wise increase now is not as relevant as it was from going from 2.5 to 3%, for example, or 3.25. You understand my drift. Going from 4.25, for example, to 4.5, or even from 4.75, anything like that, it's not as heavy anymore now. The biggest question is, how long will this be sustained for? At least that's what the most important part is, if you ask me. So, as we quickly go on here, yeah, the majority of people have expected it to be 0.25, but let's see. That's because markets have priced in a near 100% certainty, 98.9% to be exact, as of Tuesday afternoon, that the FOMC will announce a 0.25 percentage point interest rate increase when the two-day policy meeting wraps up in about 20 minutes from now. While there's often strong market consensus heading into FOMC meetings, it's rarely this high. So to give you guys some rationale into that, let me quickly see if I can grab it for you. I believe most of the time it's like an 80-20 trade-off. So we have like an 80% certainty. Let me quickly see if we can find the numbers this time around as to the certainty of it. I believe we can. I believe we can. I'm just wondering exactly which website we usually watch for the FOMC data spread. Let's quickly check this out. Where exactly do we usually watch that? I'm just thinking here. Usually we have one website that we check out where you can see the different spread that people are expecting, like the but it's not over on Trading Economics itself, right? We still have the forecast here, certainly, but not with the percentages, I believe. Do any of you guys remember exactly what the website was that we usually check for the predictions? Let me quickly open it up on the side here, I guess, and see if I can find it in the midst of things. Let me also see what you guys are saying. FederalReserve.gov has it right on their page. Okay, let's see. I was just on FederalReserve.gov because that's what I'm finding here. So where do we see then the division between I'm not talking about the link for the press conference, guys. We have that. Forex Factory, okay. Let's type it in. Let's see this. Okay, so for some reason, I'm not sure exactly where to find it anymore with my tiny little brain. It's possible, guys. Sometimes we have this. Usually I have it open once we start. Anyway, the point being, it's expected now by 98%, and that was actually the consent. It doesn't matter, right? Let's say usually it's about 80-20 from as far as I can remember right now. It's a very strange split of, I'd say, 99 versus 1%. which is something you don't really see that often. I just can't imagine that I can't find it anymore. Peculiar, but I guess that is what it is. Yeah, very peculiar. Anyway, let us see. Now, moving on, because I guess we don't have to. Why did you guys tell me to just press the button right in front of me, huh? It was right there. Okay. Well, we got it, I guess. Yeah. So it was the CME group data, because the reason we always have it open is because usually we check this to see how long it still has left. My bad, all right? My bad. Little amateur mistake, but can happen to the best of us, all right? Can happen to the best of us. Now, it's 99.6% of the people that are saying 0.25, basically. This is something that's quite unprecedented. I've never seen it this high. Let's see. We can also check the future upcoming events. You can see the probabilities for those. You can see also an 85% split as of this point. But from May on forward, it's already a little bit less. Obviously, as the further in the future you go, the more you can kind of see the shakiness of it all. But it's quite peculiar to see this high of a number. Something you don't really see at all. I don't think I've ever seen it before. So Martina says, how bullish if the Fed doesn't raise rates? So by no definition is that really bullish. By the standard of, you want it to be as low as possible, it's bullish. So per se, you can say, okay, it's nice. However, if we understand the measure as to why they have to increase it, it's not necessarily that nice. That basically state, okay, we're at a good enough number for right now to combat inflation in due course. However, most economists have stated before, no, the number needs to be higher and stretched out. So if they stop already, that would kind of be against what everybody expects to be good, which would be kind of like a shock. Would that be bullish? Debatable, because in theory, it could also mean that right now, ending at too low of a level would extend the recovery period for too long, meaning too hard of a hit in terms of a recession, because they don't fix the problem soon enough. So that can mean a harder landing rather than actually upping the interest rate even more, if you understand my drift. So in theory, I'd say that yes, it's nice. It's nicer if we don't have any interest rate increases. But in practice, I'm not so sure that that's actually something that's nice. I'm not so sure if I would be very much for the idea. Fun and FOMO says, all of my research personally, I'm selling alts in May and getting back sometime in September, October, November. Yeah, so usually November is that good time. No, October, I think, is also a good time to start. I think usually the end of the year is the best time, huh? Until like December somewhere, because people sell for tax purposes. That's what's kind of seemed like over the last couple of years. Where do you guys think Bitcoin is going to head to? Just a quick little question for all of you guys watching. Do you guys think Bitcoin is going to, like, let's say 30,000 or like 10,000? If you have to pick something. I'm not talking about like a year, 5 years in the future. I'm talking like the next move. Like, what do you think the next move for Bitcoin is going to be? Okay, so we have Corey coming in with 26,000, Fury with 24,000, Battle of the Bands, nice name, with 0. Barand says Vig down and back to 23. Barefeet 10, Bullish 44, 25, 19, 25, 75. Huh. No 30, neither 10. Okay, just say your number then. It's also funny? Whenever you guys have put this down, I can look back at the live stream afterwards and I can see exactly which one of you guys was right and who was wrong, which is always funny. Yeah. So, guys, for anybody watching here, we have 14 more minutes left until the FOMC meeting concludes and we get the interest rate number in the U.S. And then 30 minutes afterwards, we're going to be getting ourselves this press conference, which is going to be interesting. Oh, it's going to be juicy, guys. It's going to be extremely juicy, so watch out for that. Let us quickly open up the reason I'm opening up a 1-minute chart right now, guys, is because you're going to see you're just going to see here. Things are going to start getting pretty hefty pretty soon. All right, don't be surprised to all of a sudden see a crazy amount of volatility here. We still have a little bit to go, but this is, I'd say, this is the last 15-minute candle that we'll see. And usually that last 15-minute candle already on its own is pretty severe. It does some pretty crazy shenanigans. Again, to put it into perspective, right here you can already see as well that every single one of these times, this is the 1 hour chart, but you can see that last hour. I'm not sure if this is the first hour and this is the second hour. We can quickly check that out if we want to. But I'd say it's okay for right now. Usually there's just a lot of volatility right around that time, and we all know it. Everybody, by the way, just a quick little note, heads up. If you're watching this right now, make sure you press that like button. We have 350-ish people watching. Let's get this to at least like 150 likes. Why not? What do we have to lose, right? Let's quickly get to 250 likes before the meeting starts. It's about, 12 minutes left or so. All right, there we go. There we go. Everybody, you are appreciated a ton. And to also make sure that everybody's expectation is in check, we are expecting volatility. That does not mean we expect the price to go up. That does not mean the price is going to go down. Usually in times like this, we'd expect, okay, the more bullish the number is, the more bullish that Bitcoin is going to act, right? Because that's what the major indices are going to do and whatnot. For right now, however, we already know the number is going to be 0.25. The question is just what exactly does he add to that claim? What exactly is said the 30 minutes afterwards in the FOMC conclusion talk where Jerome Powell goes for a little speech? That's the most important key part. That's exactly what they on CNBC say as well. It's not really about the number that comes out right now. No, it's about really what they're going to say right afterwards. What's the story here? What are their decisions over the next couple of weeks, months, and I'd say year or two? Rather than what exactly is this next number going to be. The most crucial part, the most by far, is how long will they get these high numbers going? When will things turn back around? That's the big question. Not, is it gonna oh damn, it scares me. Is it gonna be 0.25 or 0.5 or 0.0? No, it doesn't matter. Doesn't matter. Does not matter. All right? Doesn't matter. Andre says, why it might be going down, actually, if the expectations are plus 0.25%, which is good. As I said before, any one of these things is quote-unquote bad, depending on how you view it. So the higher the interest rate is, the worse for almost everything in your economy except for saving. And I guess from everything in that department, it's good. So for saving and for the preservation of capital, it's nice. But for consumption, it's bad. For production in every nature that I can think of, it's bad because, again, think about it. The cost of capital, by literal definition, is going up because that's the interest rate, right? That's the cost of capital, basically. It's going up. So any project developer would rather just wait it out or not invest it, rather save it up because the savings rate, again, following that literal principle, is going up. So what are you going to do? You're going to save money. You're not going to spend it right now. You're not. It's literally the whole thing behind it. You're not going to spend. So inflation, by that nature, will go. This is oversimplified, but it will go down generally. So the opposite works in that same way as well. So the lower the interest rate, the more likely you are to spend and get that money out there, and the more that these project developers will go and build things, which means more jobs, higher pay, yada, yada, yada. You understand? Oh, put low cut on mic to stop the booms through my 600-watt sub, please. I don't know what that means exactly, but I'm going to let my sound guy take a look at it because I've just been messing around a little bit, but I have all the tools now. I have some mixers and stuff and some things. I'll get that done, but I have a sound man, so I can fix that. Screw Gary Gensler. Hey, you said it, man. Gary Gensler is not the best for crypto thus far. He's not been our best man, for sure, no. For sure, no. Oh, Gary Gensler. If only that man was good for the crypto community, huh? Oh, who things have been nice. Oh, who things have been nice. Do you trade or only live commentary? So there's no longer term trade. We, for the most part here, ever since $16,000, actually 15.7 or 8, we've had long positions open for Bitcoin. I've closed one of them recently, but that's for the short term. We have long positions open and they're standing open. There's not really much that I can add to it. There's not really many short-term scalps or anything that I'm going for right now. There's just long positions open up for Bitcoin. We had a little opportunity like 2 days ago or so to buy massively yet again. I put it over on Twitter. If you're not buying right now, then I don't know why not. And we can see that over the next couple of hours, if you did not buy, yeah, what can I say? You know, if you're not buying when the big opportunities come along, then yeah, what can I say? You know, you have opportunities every left and right corner. Yeah. On some exchanges, it went so much lower, which is also crazy to watch here. Here, it only went to 22.5 thousand. Huh. All the way down from like 24,000, though. It's a good ways. When is the meeting? 8 minutes. What this guy's talking about? Sorry, I meant 602 watts. Okay, it's about 50 watts a light. Nice. Nice. Oh, sorry. The meeting itself, by the way, so actually to put it into perspective, the meeting is now and yesterday. Right? Now and yesterday, I believe, or now and tomorrow. I believe now and yesterday. And the numbers, the conclusions are coming out in 8 minutes. And the conference is in 38 minutes. So we watch both. One of them is going to just pop up and you're going to see the markets just spike. And then 30 minutes afterwards, you're going to see the Jerome Powell go for his little speech and give us some information. And again, the information this time around, this is the first time ever that I agree with this, is more important than the actual number itself. Because everybody in the whole world is knowing that it's going to be 0.25 because of all the hints they've given over time. So as we all know it, it's consensus and forecast. Everybody knows it. It's going to happen. The market, in theory, should not be as volatile as usual because there's certainty, so it's priced in, you'd say. It could still do a little bit of a oopsie-doopsie. The inspiring... Okay, so let's actually see what you guys are doing in terms of trades. Is anybody doing anything crazy? What are you guys' strategies? We have 7 more minutes left. For me, I'd say if you wanted to trade a move like this, you're banking on the volatility, right? So you can basically play with some dual positions and try to close one or the other, banking on the volatility that your other trade is going to win, basically. And just closing the opposite direction as quickly as possible, because usually there's spikes in times like this. It's extremely risky, though. And my own strategy about this is just, well, Bitcoin's direction is going to be upwards. XRP's direction is probably going to be upwards. And for most of these coins, it's going to be upwards. Let's just buy it and keep holding on. Because going long or short right now, it's a difficult little endeavor. A lot of my Forex friends as well say, if you're trading during times like this, you're a madman, because the profit could be insane. You could literally go in today with $1,000, come up with $10,000 the same day, but you could lose the $1,000 as well pretty quickly. It's not that hard. So, yeah, from that perspective, man, if you want to play this game, pay close attention. All right, we're seeing a couple of people in the chat box. Also, by the way, guys, you can always join our Telegram as well. There's an alerts Telegram and like a membership Telegram just for fun. There's, I don't know, like 4,000 people or so in. Not sure how many are in, but there's always a link down below for that. I'm gonna quickly share it in the chat box if I can. I also recommend you guys to join that. Oh, that's the alerts one. There's also a chat. Let me quickly see if I can find that. Here we go. So the below one is the chat. I'm gonna pin it so you guys can also join in on our Telegram chat. Just chat and say hi. And I try to share whenever there's important announcements, like for example the ECB numbers, inflation numbers, all these things, Eurozone inflation, but all that stuff. How about this exchange, Bybit? That's the exchange that I personally use. I personally think Bybit is my favorite one. I personally think Bybit is the best one from what I want. But a lot of that has to do with bonuses. Like, sometimes I like to go for BitGet and basically, quote-unquote, recommend the exchange for the reason that it has the best bonuses out there. But Bybit right now, by far, is the best. KuCoin, they screwed me over a couple times, so I'm not big fans of them until they get a proper representative to speak to me and basically apologize for some of the crazy things that they've done. And I just didn't trust them for a little while. The same thing goes for Crypto.com. I was big fans of them, used them all the time, every single day. And then all of a sudden, they did some crazy shenanigans, and I was like, ooh. BitTrue, they have incompetent people. Founder is a really nice guy. I met him over in Singapore, I believe. I think he quit, right, to do something else. Really good guy. Binance is awesome. No question about it. Amazing exchange. No different thing I can say about it. It's just not the best for making money, I'd say. But it's most stable. MEXC, yeah, it's just if you're in a place where MEXC is your best option, okay, sure, that might be the thing. Bitra, I've never had problems with the exchange themselves. I just know the employees are kind of weird. That's all. The founder was cool though. That's all I know about that. What was I trying to find again? Oh yeah, I also have a little link right here, and I didn't even know that up until now. Apparently, with this link, little side note. Let me share it in the chat. Oh, compatibility issues, obviously. Dusty, think about that. You're not using a MacBook right now, okay? Let me send it here. How do you send stuff to yourself on Telegram? I don't even remember. Whatever. I'll figure it out. There we go. Okay. There we go. Just wanted to say, okay, we have 2 more minutes, by the way. 2 more minutes. No! Almost there. Be careful. Get swifty. It's going to get crazy. Whoa. I want to say this link, actually, fun fact, if you deposit $100 into Bybit, you get $100 for free in terms of a trade. You get a $100 free trade. Little fun fact. Okay, guys, get ready. We have 1 more minute remaining. Okay, let's go to some more liquid exchange here. Let's go to Binance. 1 minute chart. Guys, get prepared. We have a little bit over a minute left. All right. Let's see. World clock. Okay. Let's do our London clock right there. That's fine enough. And on the side here, guys, I am pulling up the actual number. The moment that it's shared, I'm going to scream it out, guys, so don't worry about it. It's loading in. All right? It is loading in. Things are starting to go down. I need my clock. Couple seconds. Okay, the clock can go now. Numbers are coming in hot. And the number is going to be... Okay, Mark's going down. Mark is falling. Bitcoin is falling. Bitcoin is dumping. Bitcoin is dumping like crazy. It's falling. No. 4.75. Hey, well, exactly as we expected. 0.25 increase. And Bitcoin fell significantly. And probably will not recover. Let's see here real quick. Usually a little pump or dump, I guess, pump and dump and pump. Let's see. Massive volatility towards the downside. Roughly 1%, though. Not a craziest of crazy dumps. Let's see if it will follow what it did back in December, back in September, back in November, or if this time around it's going to shift over. Very interesting to watch this already. So most of the time, again, we saw some massive volatility one side, then exactly afterwards, the next minute, the other side. Let's see how this is going to continue on. Let me quickly also tweet out to all the people that indeed the number was exactly as was expected. Not really surprising to anybody ever, but okay. U.S. Let me just quickly share the data. U.S. interest rate was just increased by point. Let's quickly check everything out to make sure everything is all accurate. Again, for anybody wondering, we went from 4.5 to 4.75%. It's official. And now, in about 30 minutes from now, we're going to get ourselves this call. And Bitcoin is now pumping. So right now, from the bottom to the top, we're up roughly 1.16%. Oh, Bitcoin is going on. It's going on. Pump. Pump. $32.2 thousand. Moving. It's moving, guys. It's moving. Let's see. Oh. Okay, so we've actually switched over. We're starting to get bullish now. Okay. Pump it up. Somebody says no move is just hype. Regardless of what's causing it, there's a lot of volume right now, and it's moving a lot. So what I miss? You missed the interest rate numbers. 1 minute ago, they got released. Almost 2 minutes ago now. A-Dub says it moves. That's what it does. Yes. Adam says pump 1%. I mean, it's pretty significant for a 1 minute, my friend. For this move, with this amount of volume to happen in 1 minute, that people are watching this exact move right now. People are going crazy over this. If you want, we can actually go towards seconds, right? I believe so. If you want seconds, we can do that, my friend. Not sure this is worth our time. This is the second chart. Let's go away from here. Oh, but that was interesting. It was less than I honestly anticipated, but I guess that's only what we're going to start seeing over on the hourly, right? Because right now, in terms of actual volatility, it is very low. Not really much happening at all, actually. It's not even bigger than what we saw like literally yesterday evening, just a casual evening. So it still has yet to be seen whether or not we're going to actually see the crazy amount of volatility. There's just some volatility around that move like we always see. Again, guys, understand, again, the most important information comes in 27 minutes from now. We're going to live stream Jerome Powell's speech as, again, CNBC states it and all these different sources state it. That's exactly what decides whether or not we anticipate all this as a bullish or bearish thing. The number itself was already known, all right? Nobody in the world didn't know it was going to be 0.25. So the only question is, what exactly are they going to say? So let's take a look at the context here. Conscious that the fight against inflation is far from over, despite some encouraging data lately, Mr. Jerome Powell could push back on the idea of a looser Fed so soon in the future, and Fed projections released in December indicate no cuts this year and continued rate hikes. I believe it's already the 8th in a row that we've seen now, and so again, we knew it was going to be a rate hike. The question was, for how long is this going to be sustained for? He's on a very tight monetary policy tightrope, where he can't allow the market to think this is the end game, said Quincy Crosby, chief global strategist at LPL. It's prudent for him to be careful. It would be almost reckless for him to have the market believe that they're just about finished and inflation is where they want it. Inflation is certainly not where they want it to be. With a careful communication path, Powell must walk in mind. Here's what to expect when the FOMC's post-meeting statement is released at 2 p.m. Eastern Time. I believe there's no statement as of this point, right? We only get the statement. Is there any statement that's already released? Or do we only get the conference? Again, the number is right now 4.75%. We've got an increase of 0.25%, as was expected, as everybody knew. For anybody that wants some actual proof of this, check it out right here. Let's see here real quick. FOMC press conference. Let's quickly see. Live video. Okay. 2:30 p.m. We have. Ow! Damn. Did you guys hear that? Do you guys actually hear it? Let me quickly confirm. I hear it very loud and clear. I think you guys are fine, huh? You guys can hear. That is the FOMC press conference, which we're going to be starting to see in about 25 minutes from now. So the big question is, what exactly are they going to announce at that? Woo! It's about to get exciting, though, guys. The fact that this is such a huge week, many people are underestimating the severity of this specific week right here. It's crazy to me. Are you understanding how big this week will be? We have so many announcements. It's crazy. And this was just one of them, huh? It's just one of them. But usually February is a pretty crazy month anyway. I'd say the end of January, beginning of February usually is a pretty crazy period. And we're all watching out for it. Let me quickly see in the chat box again. Guys, if you're watching this right now, let me know in the chat box real quick again where you're all watching from. But most importantly, what time is it for you now? All right? Dubai time, it is 11:07. Netherlands time, it is 20:07. I guess I have the world clock open somewhere, so I guess I could check for everybody. But, you know, it's more fun if you guys just put it out there. Yeah. New York, 14:07, I guess, huh? Tokyo. Anybody watching from, like, Australia or something in the middle of the night? Right now? Where are my actual, like, middle of the night soldiers at? Who is here struggling to watch this, keeping their eyes open at, like, 4 a.m.? Prime time says, I'm sweating like a sneeze stuck in a... Oh, damn. Okay. We got people in LA at, is it 11 a.m. in LA? That is wild. I didn't know LA was that far away. Colorado, 12:07. All right, that's crazy. Wow, I never knew there was a 9-hour difference between LA and here. Between Netherlands and LA. And how much is that between Dubai? That's 12-hour difference between Dubai. That is wild. That is crazy. That is crazy. That is crazy. South Africa. Oh, no, I thought somebody said South Korea. I want to see somebody. There's nobody here from, like, Australia, Irish. No. Oh, okay. We have Fury watching at 3 a.m. with coffee, though. I respect that. Okay, so we just have one soldier in that department. All right. Still appreciate all of you guys, though. You guys are all amazing for stopping by and saying hi. Now, again, we have to wait 20 minutes, though, before this press conference goes live, and we're going to see something new. And everybody, if you're enjoying Daily Crypto News, well, if you want to, you can always subscribe to the channel because we provide daily crypto news, obviously with the emphasis on daily. So every single day, there's more crypto news coming out that we share on the channel. And usually, it's pretty cool stuff. For example, later tonight, as I already said, we're covering exactly what happened to XRP. 1 billion XRP was released onto the market yet again. Why? It's very simple. Happens every single month. Jim Cramer, that we already covered. This guy is a menace, man. I've covered it on multiple occasions, but this guy, I swear, every single time that this man tweets, I get nervous. Every single time that he tweets, I get nervous because this guy likes to break our structure. He is the guy. Let me show it to you guys. Actually, for anybody that does not believe me, let me show it to you right now. This guy, whenever he says something, I get a little bit nervous because he just said there's a bull market right now and we're going to start pumping, so better buy the freaking dip. As you all know, whenever he says that, turn off your freaking computers, get out the house, take a walk because things are about to get depressive. All right, things are about to get really, really depressed because that's exactly how this man goes about these things. It's always the same way. It literally always is. And you can see the people start to kind of, yeah. Crypto investors right now, I mean, when it rains, it pours, man. I mean, it is what it is, guys. It literally is what it is. Should we also turn a little light on, by the way? Let's see. Should we turn on a little light? Does that make things better or worse? You have ADHD, maybe, perhaps, right? Who knows? Who would check? Who cares? But yeah, it's been interesting. At least all I know for certain is that this man is a menace. And whenever you see him being positive, better run. Especially now that this happened. Mr. Michael Burry, the guy behind The Big Short, said sell. And then Jim Cramer right the same minute saying buy. That means we don't know what to do because both of these guys are contrarians. Jim Cramer being contrarian in the sense that he's always wrong. And Mr. Michael Burry being a perma-bear. So the reason I'm always against Mr. Michael Burry, even though he's a genius in disguise, he is the guy that always says, be careful, be cautious, because things can fall. And the thing with that is, you're right. Not often, but sometimes. And the moment that you are, you'll be praised for being right in a time where everybody was screaming up and up and up. But the thing is, if you scream left enough times, well, at some point it's going to turn that way, right? If your car is turning around and it keeps going right, maybe at some point indeed it's going to turn left. And all of a sudden everybody's like, oh, wow, this guy's a genius. Well, he was just banking on the opposite direction. And even though he was wrong most of the time, at some point he might be right. And that's exactly the way that I view Mr. Michael Burry, albeit that he's definitely done some good decisions in his heyday. So I'll definitely give him that. All right. But in terms of listening to his every single call, I'm definitely opposed to that idea. I think actually no light is better. Like more ambience. You know, I have like a little candle right there, especially lit for you guys, to commemorate this beautiful FOMC meeting. Yeah. And it's not as volatile as I would have liked to see, to be honest. Not that special, not that crazy, not that surprising. So we still have to wait just a little bit. One day Jim will be right when the big con needed. Yeah, I think Jim Cramer is right often, but he's wrong way more often, and that's the problem with that. Masmati says, whether the market goes up or down, it doesn't matter. Just be on the roller coaster. I'd say I'm going to have to agree with you on most of that. It doesn't really matter if the market goes up or down. I have a perma long position open, meaning I'm always long, I'm always bullish. And it only changes whenever I go for hedged positions. And I talk about this whenever I go to conferences and I speak or things of that nature. I think hedged positions are always a smart idea, but that's, in my own opinion, the only reason to have shorts open, as hedged positions against main portfolio decreases. To put it into perspective for anybody that does not know, if you're basically part of bigger finance, meaning you actually manage more money. If you guys do not know, I manage a ton of money, all right? Hundreds of millions of dollars are under my command. It might sound strange, but people like to keep things private, so do I. But in a certain sense, I know a lot about managing money, even though officially I don't think I'm a financial advisor. Maybe I am, though. I did study econometrics for a couple years, as you guys might know. So I do know a little bit about finance here and there. That's not the point I'm trying to say. The point here being, I understand, as far as I can tell, a lot about making sure your money is kept in a safe manner, albeit that that's not the most profitable way to keep your money most of the time. And as a VC, you have two very hedged ideas. One is, or I guess contradictory ideas. One is risk being extremely high because it's a probability game. And that's the same thing for, well, I guess there's multiple analogies I can put. Let's just do a very simple one. It's actually like this. If you keep playing the same game over and over and over again, with a payout of 100x and a loss of 100%, meaning you lose your entire input. If you keep playing that game, but the probability of winning is 1 in 50, you'll keep playing that game because your expected value is ridiculously high. And the same thing goes, to put it into a really smart, simple way to put it, is, let's say, hypothetically speaking, that you're playing roulette, for example. The probability of winning, if you pick red or black, is 50%, right? So let's say that you keep banking on red time and time again. Well, as the expected value is basically 1 or slightly below that, you're basically not going to go for it because you're going to be right half the time and you're going to basically double your money half the time, so it's not worth it, right? You're not really making much. If every single time you won, your money goes times 5, though, with the same probability of winning and losing, yeah, you'd probably take that. You'd try every single time because it's a continuous thing. So your expected value goes up. And the same thing goes for VC investing for the most part. As I said before, I know so ridiculously many people that made $10, $100, $150 million in a span of 12 months, let's say 16 months, 18 months. And that's because it's mostly about willing to take that risk where others are not. And I always relate this back to Elon Musk and specifically Jeff Bezos. I believe there was a scenario where Jeff Bezos had about $20 million to his name. And most of the people, when they're confronted with that idea, they think, okay, I have so much money. Let me take it safe from now on. Let me play it safe. Let me take some money out. Where Elon Musk, similarly, when he sold most of his companies, they go through some rigorous mental gymnastics to not want to quit and just continue on with, just ridiculously high amount of risk and just continue on with a lot of money. Anyway, the point being here, I'd say the majority of people watching right here don't know a lot about how, or I guess, moving a lot of money or how a lot of money moves. I swear to God, there's so much more money in this realm than people can imagine. So for example, and this is something that I've learned not too long ago as well. If you asked me 5 years ago how to make $1 million a day, how to make $5 million a day, I'd look at you and think, how exactly was that possible? Now you'll start to understand as you, I guess, progress circles. The amount of people that are making millions of dollars every single day is pretty vast. There are so many people out there, and it's not actually that rare. It's rare, but not that rare. And the same thing goes for managing $100 million, for example. You might think, oh, that's so crazy. Oh, wow, that's so odd. You know how many people out there that are doing this with a breeze? There's a 19-year-old kid, a Dutch guy, actually. I think he's managing $1.3 billion. Is it difficult? Well, it depends on your perspective. But it's something that is, in my own opinion, pretty easy to learn as you get the right circles. And it's something I've told so many of my friends in Dubai here as well. I'd say it's just a game of knowing people. You need to get the right investments. You need to understand exactly how to allocate. But for the most part, other people do the rest. Do you need to know a lot about legal? No. Do you need to know a lot about what exactly? You need to know a lot about the right investment to place and a lot about keeping sure that you, I guess, keep taking the same or similar risk with proper risk management. I'd say risk management is the most important part. Anyway, why am I telling you this story? It's because even in these times as well, man, risk is the most important part about it all. Market going up or down, it doesn't really matter too much depending on exactly how you place your bets. And for me, most of the time it's just going up and up and up. And the more that the market goes astray from this like sideways trajectory, the more we press more on these riskier investments. And I'd personally say as well, riskier obviously is per definition less likely to keep money in the bank. Okay. But as the last 10 years have shown, it's very much worth it to try. And it's very much worth it to attempt these riskier projects because the returns are just so great. How often, let's just quickly do a little poll here. How often have you guys had a 400x from crypto? How often have you had a day where you made a couple $1 million, for example? I'd expect here that not as many people would say yes. But if what if I were to tell you now that I sat there in front of a guy, right, that's told me at least like, let's say maybe 6 or so times that I should invest $10,000. And a lot of those times I said no. And again, I told you guys in one of my stories on, I think my TikTok or one of those places, how I lost how I missed out on $20 million. It's because the guy in front of me kept saying invest in these projects, and I was too risk averse. I kept saying, no, it's not a smart idea. No, it's not a good idea. It's $20 million that I missed because I just said no a couple times to this guy in the bull market last time around. All right? It's a little personal in the sense that I don't really share the journey too often, but it's just funny to me how people can say, oh, but I will never become a millionaire. Really? If you have, for example, $10,000 to your name right now, it's honestly not that crazy through crypto, but it's risky. Because there's honestly a chance as well that you're just going to be stupid about it. Maybe not at fault to you, but just you're not making the right choices and you go to zero. But there's going to be a lot of people again. There's going to be like these 17-year-old kids that are going to turn a couple $1,000s into millions or tens of millions of dollars in a year or two. Because this stuff is really crazy. And it honestly takes a little bit of an eye-opener for a lot of people to see this. But really, it's funny. The same thing goes for people selling courses. So I've never sold a course. And for the most part, it's just because I don't want to be known as the guy who sold courses. You know, it's just it's a thing that I don't like too much. But a lot of this knowledge, it all is up for the taking, but people don't grab it. For example, can you manage a VC fund? I don't know. Depends on your knowledge. Is it hard though? Not really. If you know the right people and you have a little bit of the right knowledge, which you can learn in a day or two, well, that's basically all you need. As I said, how do I manage a lot of money? Well, because you know the right people. So again, it's as simple as grabbing 100 people that put $1 million or grabbing a couple of major funds that are like to put 5 million, 10 million or so. I personally don't think it's that hard. You need to know the right people though. How many VCs do you have on your phone? You have 100? You have 200? How often have you been to a VC conference or a family office conference, for example, or family office meeting? How many are there in the room? 50, 60? Every single time. If you go to a VC meeting, there could be 400 there. All these 400 people or companies potentially have billions of dollars to their name, you know? Connect with those people, yada, yada. But you need to know all this stuff. Anyway, I'm going on a tangent here. Why? The point is just that when people talk to me saying that crypto cannot really go up too much because there's a lack of money or things of that nature, I often look at them and think, wow, you're so ignorant of how much money there is in this world. And there are many people who understand who are giving you these secrets for free on YouTube. I'm not one of those guys, really. I give some secrets, but not that many. But many people call them off saying, oh, you're stupid, or you're a liar. When really, guys, I sometimes watch YouTube videos. I look through the comments and see people are calling this guy out, even though he's making tens of millions of dollars every single month and he's giving you the tips. People sometimes are just too ignorant to understand how much money people can make. If I told you now, for example, that crypto YouTubers that you might be watching right now are sometimes making a couple $1,000,000 a day, would you look at that and think, that seems logical? No, you wouldn't. But I know it for a fact. It's not a question. It's not a, oh, maybe. No, I know it for a fact. You can see it with your own eyes. And it's logical because you can speak to the companies. You can see the numbers. And even when you sometimes speak to other companies, to keep it kind of vague here, they sometimes don't believe it. But it's the truth. People here are making so much money off of crypto. And it's up for the grabs. You just need to know the right people, know the right parts about it. But it's not impossible. And the same thing goes for turning $10,000 into $1 million, $5 million, $10 million in a year or two. It's not that crazy. Focus hard, and it's honestly, the doors will open to you. Knowing how to make $1 million does not show up overnight. You know, you need to know quite a couple of basics of it. But if you asked me 5 years ago how to make $1 million, I wouldn't know. I just honestly would have no idea. Now I can think of quite a couple of different ways how people can get it done. And the same thing goes for multi-millions of dollars, albeit that I don't know how to consecutively make $5 million a day or something. Otherwise, you know, I would probably be doing that. But making it consecutively, still haven't figured that one out. But I know it's possible because I know there's people who can, right? But how I? Different. But I know it's possible though, right? And you get that from understanding and seeing that the world is quite a lot broader than might meet the eye. We're filling time here. We still have 7 more minutes to go. All I'm trying to say is there's way much more money than people think. People are way richer than you might ever think. And the amount of money you can make in a year is way crazier than people might imagine. Okay, one more story before we move on to the FOMC meeting, all right? So I talked to you guys about one of my friends in Dubai, right, who called the top, who called the bottom. He was pretty good. How did you know that? I don't know. So there's only 2 crypto projects that he invested in. I believe both times $100,000. But it could be $1 million. But I believe it was only $100,000. And I believe those 2 pre-sale investments got him to over $150 million. How long? I think it didn't take more than a year or 2. And the same thing goes for people who invested early into Chainlink, invested early into some of these major projects. Yeah, was it luck? Depends. I mean, some people have the knowledge to look into it. And the same thing goes for fundamental builders like Aptos. Now, Aptos was pretty secluded for the traditional folk like the you and I, like the retail. On the VC side, though, many of my friends got big placements, putting a couple $1 million in. And yeah, since Aptos is a foundational builder, it's so huge, a lot of VC money, but huge. Man, that's a pretty easy, crazy return on your money, especially as it's like an instant unicorn. So it's good for the balance sheet, or no, for the portfolio list. It looks good, so you're easier to then grow into multiple different companies as you have then invested in such a huge company. You're more easy to get into other different companies or projects to invest into. Point there being, yeah, there's just so many deals that are good that you just do not have the access to potentially. And I'd say the best thing, okay, to conclude, if you want to get rich with crypto, best thing you can do is meet people, period. Connections, your network is your net worth. It's more true than anybody might ever imagine. Extremely true. We'll conclude it with that. So no need to go on more of a rambling tour. Meet people. Anybody calling you out for going to conferences thinking, oh, it's so dumb. Go there with the right mindset of meeting the right people. Ask the right questions. Especially if you go to a Dubai one, there'll be so many VCs there, but if you don't know what to ask them, you're not going to get anything from it. If you're going to go there and say, oh, I'm interested in learning, you're going to get nowhere. Nobody's going to help you. What can they do with you? How can you do business? Go there with the intention of, okay, I'm this company. I have envisioned, I've researched whatever I want to be. Go into the meeting or conference with that idea. Hey, I want to meet like-minded people. Okay. You're going to start talking a little bit more. You can say like, hey, I have a VC, for example. How have you done this? Or let's share deal flow or things of that nature. Sure, that's fine. If you go into the meeting and say, I'm learning, nobody's going to be taking you seriously. And I've had it 1,000 times. No, okay. But I've had it multiple times where even people that watch me on YouTube say, hey, man, nice to meet you, man, but I'm just learning crypto. I'm like, okay, that's very cool, man. And then what? Because what can we connect for? I can't really... It sounds strange, but I can't really use you for anything. I can't really help you with much except for saying, all right, man, keep researching, buddy. He said, yeah, I want to get into crypto, man. I say, okay, cool. Good luck. I wish you the best, my brother. If you need any help with what videos to watch, just go to Google, because I'm not going to be your help in that. Just Google it, But if the guy comes up and says, hey, man, I've been working on my agency, for example, like a marketing agency, whatever, or I've been, VC is a venture capital, by the way, or venture capital fund. But then you have a lot more room to do something with, I'd say. And by the way, a VC, for people that do not understand, in theory, a VC does not need to have billions of dollars. It doesn't have to have trillions of dollars. It doesn't have to have hundreds of millions of dollars. A VC could literally have $10,000. I guess the only difference between angel investing and VC, I'd say, is VC mostly has other people's money inside of it. But a similar thing goes. Okay, I have to add another thing. So anybody watching right now, do you know how to raise $200 million? If the answer is no, well, then we're not talking the same game. If that's not your little circle here of people that you know, if you don't know people that have a net worth of over $1 billion, you can't name 5. Well, that's a little bit of a problem. All right. I wouldn't be able to call them up and say, hey, buddy, let's hang out. Okay. I'm not that, I'm not there yet. No, it's not that cool. But at least they're in the context, you've met them before, you've conversed and stuff. That's a step. And the same thing for, if you don't know that many people with a net worth of over $100 million, maybe take a little bit of a step upwards. And if you can't raise for the right causes, all right, raising $100 million is not easy, because people don't really trust you and people don't really believe what you believe in. And there's a lot of, intermediary steps. I'm just talking about knowing how to raise it. So for example, you need to know the people that are angel investors or VC funds that have the money to invest if they are interested. Two big other sides, right? Having them to invest is a different game. By the way, if only you know these people. There's another trick from the book, all right? I swear to God, things are so easy. You can make so much money. There's 2 other big hacks. I'll just tell you guys right now. We have 2 more minutes to film. One is being a referral. So if you know a lot of developers, you can make a month or a year's salary, depending on how good the market is, for just referring devs to projects. So there's some crypto companies out there. There's some crypto YouTubers as well. They make millions of dollars every single year just off referring developers to major projects. That's one thing. A second thing is being the introducer of venture capital money, or any money forever. So, for example, if you know a lot of people with a lot of money, you can actually take a 1, 2, sometimes a little bit more % fee on the amount of money that they invested in the project. Let's say we have a project, again, we have 1 minute left, that is raising $200 million, and you're able to get them that $200 million. You can make yourself $4 million just off of, in theory, just 1 call, if you know the right amount of money right there, right? It's just a little fun fact. That's all I'm trying to say for right now. Too much talking, too much facts. People are not telling you this because I don't know why. I could write a whole book about it. People have done it. You haven't read it most likely, but you can. And yeah, Mr. Powell's starting the speech in 1 minute, so we're gonna watch that. I just wish the best upon so many of you guys, man. I swear, I wish there was somebody a couple years ago that would have just told me, man, take the risk, take the plunge, because I would have been so much further in life right now. Even though I could still not say that I'm unhappy, I would have taken things differently, and it would have been so much further in life. Especially if somebody had shown me the amount of money that people are making on a daily basis a couple years ago. And a crypto job or any sort of tech job by far is one of the best things you can also go for. But I'd say anything in terms of marketing is also not too bad of an idea, by the way. I'm not the best marketer out there, but you have people for that, right? And those people can sometimes also make crazy amounts of money. For example, if you do know how to, whatever. Let's see. The speech should, theoretically speaking, start this minute. It should start now. So he has yet to come on stage, which is why I'm just taking a little second here to still take a look at everything. You can't hear anything because there's nobody there, all right? The sound is on, all right? There's nobody there. And everybody, last but not least, make sure you press that like button if you're enjoying the daily crypto streams. Again, we're doing daily crypto updates every single day about the news. That's it.
That high inflation is causing, and we are strongly committed to bringing inflation back down to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%. The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains a chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5% to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Chris.
Chris Rugaber, the Associated Press. Thank you for doing this. As you know, financial conditions have loosened since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market posted a solid gain in January. Does that make your job of combating inflation harder? And could you see lifting rates higher than you otherwise would to offset the increase in, or to offset the easing of financial conditions?
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Rachel.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. Over the last quarter, we've seen a deceleration in prices, in wages, and a fall in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate would need to go up, if at all, to see inflation come down to the levels you're looking for?
So I would say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market. But I would also say that disinflationary process that you now see underway is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed, demand is shifting back to services, and shortages have been abated. So you see that in the housing services sector. We expect inflation to continue moving up for a while, but then to come down, assuming that new leases continue to be lower. So in those two sectors, you've got a good story. The issue is that we have a large sector called non-housing service, core non-housing services, where we don't see disinflation yet. But I would say that so far, what we see is progress, but without any weakening in labor market conditions.
Has your I'm sorry.
Go ahead.
Has your expectation for where the unemployment rate might go changed since December?
You know, we're going to write down new forecasts at the March meeting, and we'll see at that time. I will say that it is gratifying to see the disinflationary process now getting underway, and we continue to get strong labor market data. But you know, we'll update those forecasts in March.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. You and some of your colleagues have emphasized the possibility that job openings could come down and that that would let some of the air out of the labor market without major job losses. We saw the opposite in the December JOLTS this morning, job openings actually rising. That also has coincided with slowdown in wage inflation. Do you believe that openings are an important indicator to be studying to understand where the labor market is and where wage inflation might be heading?
So you're right about the data, of course. We've seen average hourly earnings and now the employment cost index abating a little bit, still off of their highs of 6 months ago and more, but still at levels that are fairly elevated. The job openings number in JOLTS has been quite volatile recently, and I did see that it moved back up this morning. I do think that it's probably an important indicator. The ratio, I guess, is back up to 1.9 job openings to unemployed people who are looking for work. So it's an indicator, but nonetheless, you're right. We do see wages moving down. If you look across the rest of the labor market, you still see very high payroll job creation, and quits are still at an elevated level. So by many indicators, the job market is still very strong.
Go to Colby and then Howard.
Thank you. Colby Smith with the Financial Times. Given the economic data since the December meeting, is the trajectory for the Fed funds rate in the most recent SEP still the best guidepost for the policy path forward? Or does ongoing now mean more than 2 rate rises now?
So you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be, and that's obviously back in December, and the median for that was between 5 and 5.25%. At the March meeting, we're going to update those assessments. We did not update them today. We did, however, continue to say that we believe ongoing rate hikes will be appropriate to attain a sufficiently restrictive stance of policy to bring inflation back down to 2%. We think we've covered a lot of ground, and financial conditions have certainly tightened. And I would say we still think there's work to do there. We haven't made a decision on exactly where that will be. I think we're going to be looking carefully at the incoming data between now and the March meeting and then the May meeting. I don't feel a lot of certainty about where that will be. It could certainly be higher than we're writing down right now. If we come to the view that we need to write down to move rates up beyond what we said in December, we would certainly do that. At the same time, if the data come in the other direction, then we'll make data-dependent decisions at coming meetings, of course.
Just as a quick follow-up, how are you viewing the kind of balance of risk between those 2 options of, the likelihood of maybe falling short of that or going beyond that level?
I guess I would say it this way. I continue to think that it's very difficult to manage the risk of doing too little and finding out in 6 or 12 months that we actually were close but didn't get the job done, and inflation springs back and we have to go back in, and now you really do worry about expectations getting unanchored and that kind of thing. This is a very difficult risk to manage. Whereas, of course, we have no incentive and no desire to over-tighten, but if we feel like we've gone too far, we can certainly and inflation is coming down faster than we expect, then we have tools that would work on that. So I do think that in this situation where we have still the highest inflation in 40 years, the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation yet. So we don't see it. It's not happening yet. Inflation in core services ex housing is still running at 4% on a 6 and 12-month basis. So there's nothing happening there. In the other 2 sectors, representing less than 50%, you actually, I think, now have a story that is credible, that's coming together, although you don't actually see disinflation yet in housing services, but it's in the pipeline, right? So for the third sector, we don't see anything here. So I think it would be premature, it would be very premature to declare victory or to think that we've really got this. We need to see, our goal, of course, is to bring inflation down. And how do we get that done? There are many factors driving inflation in that sector, and they should be coming into play to have inflation, the disinflationary process, begin in that sector. But so far, we don't see that. And I think until we do, we see ourselves as having a lot of work left to do.
Howard Schneider with Reuters, and thanks as usual. So I just wanted to connect a couple dots here. The statement made a number of changes that seem to be saying things are getting better. You're saying inflation has eased. That's new. You've taken out references to the war in Ukraine as causing price increases. You've taken out references to the pandemic. You've eliminated all the reasons that you said prices were being driven higher. Yet that's not mapping to any change in how you describe policy. We still have ongoing increases to come. So I'm wondering, why is that the case? And does it have more to do with uncertainty around the outlook, or more to do with you not wanting to give a very overeager market a reason to get ahead of itself and overreact?
So I guess I would say it this way. We can now say, I think, for the first time, that the disinflationary process has started. We can see that, and we see it really in goods prices so far. Goods prices is a big sector. This is what we thought would happen since the very beginning, and now here it is actually happening, and for the reasons we thought. It's supply chains, it's shortages, and it's demand revolving back towards services. So this is a good thing. This is a good thing. But that's around a quarter of the PCE price index, core PCE price index. So the second sector is housing services, and that's driven by very different things. And we, as I mentioned, with housing services, we expect, and other forecasters expect, that measured inflation will continue moving up for several months, but will then come down, assuming that new leases continue to be soft. And we do assume that. So we think that that's sort of in the pipeline. And we actually see disinflation in the goods sector, and we see it in the pipeline for two sectors that amount to a little less than half. So this is good, and we note that when we say inflation is coming down, this is good. We expect to see that disinflation process will be seen, we hope soon, in the core goods ex-housing, the core services ex-housing sector that I talked about. We don't see it yet. It's 7 or 8 different kinds of services. Not all of them are the same, and we have a sense of what's going on in each of those different subsections. Probably the biggest part of it, probably 60% of that is, research would show is sensitive to slack in the economy, and so the labor market will probably be important. Some of the other ones, the labor market's not going to be important. Many other factors will drive it. In any case, we don't see disinflation in that sector yet, and I think we need to see that. It's the majority of the core PCE index, which is the thing that we think is the best predictor of headline PCE, which is our mandate. So it's not that we're neither optimistic nor pessimistic. We're just telling you that we don't see inflation moving down yet in that large sector. I think we will fairly soon, but we don't see it yet. Until we do, I think we see ourselves, we got to be honest with ourselves, we see ourselves as having perhaps more persistent, we'll see more persistent inflation in that sector, which will take longer to get down. And we're just going to have to complete the job. I mean, that's what we're here for.
Nick Timmeros, the Wall Street Journal. Chair Powell, you observed several years ago that we learned we can have a low unemployment rate without above target inflation, and we have learned lately that inflation can come down from its uncomfortably high level despite a historically low unemployment rate. Given that, and given how much you did over the last year, why do you think further rate increases are needed? Why not stop here and see what transpires in the coming months before raising rates again?
So we've raised rates 4.5 percentage points, and we're talking about a couple of more rate hikes to get to that level we think is appropriately restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long and variable lags, and we're thinking about that. The story we're telling about inflation is, to ourselves, and the way we understand it, is basically the three things that I've just gone through a couple times. And again, we don't see it affecting the services sector ex-housing yet. But I mean, I think our assessment is that we're not very far from that level. We don't know that, though. We don't know that. So I think we're living in a world of significant uncertainty. I would look across the spectrum of rates and see that real rates are now positive, right, by an appropriate set of measures, are positive across the yield curve. I think policy is restrictive. We're trying to make a fine judgment about how much is restrictive enough. That's all. And we're going to, that's why we're slowing down to 25 basis points. We're going to be carefully watching the economy, and watching inflation and watching the progress of the disinflationary process.
Did you or your colleagues discuss the conditions for a pause at this meeting this week?
You'll see the minutes will come out in 3 weeks, and we'll give you a lot of detail. We spent a lot of time talking about the path ahead and the state of the economy, and I wouldn't want to start to describe all the details there, but that was the sense of the discussion, was really talking quite a bit about the path forward.
Victoria?
Hi, Chair Powell. I wanted to ask about the debt ceiling. Given that we've now hit up against it, I was wondering if the U.S. goes past the X date, will the Fed do whatever the Treasury directs as it relates to making payments as the fiscal agent, or will it do its own analysis of any legal constraints?
So your question is, would we, say your question again?
Will the Fed do what Treasury directs as it relates to making payments, or will it do its own analysis of any legal constraints?
So you're really asking about, you're asking about prioritization, in effect, is what
Yes,
you're, okay.
yes.
So I feel like I have to say this. There's only one way forward here, and that is for Congress to raise the debt ceiling so that the United States government can pay all of its obligations when due. And any deviations from that path would be highly risky, and that no one should assume that the Fed can protect the economy from the consequences of failing to act in a timely manner. In terms of our relationship with the Treasury, we are their fiscal agent, and I'm just going to leave it at that.
Are you actively doing any planning of what might happen in the event that that would happen?
I'm just going to leave it at that. This is a matter that's to be resolved between, it's really Congress's job to raise the debt ceiling, and I gather there are discussions happening, but they don't involve us. We're not involved in those discussions, so
Raise the debt ceiling.
we're the fiscal agent.
Gina and then Steve.
Crazy.
Gina Smilik from the New York Times. Thanks for taking our questions. I wonder, was there any discussion today of the possibility of pausing rate increases and then restarting them? Lori Logan from the Federal Reserve Bank of Dallas seemed to suggest that that would be a possibility in a recent speech, and I wonder if that view is broadly shared on the committee.
So the committee, obviously, did not see this as a time to pause. We judged that the appropriate thing to do at this meeting was to raise the federal funds rate by 25 basis points, and we said that we continue to anticipate that ongoing increases in the target range will be appropriate in order to attain that stance of sufficiently restrictive monetary policy that will bring inflation down to 2%. So that's the judgment that we made. We're going to write down new forecasts in March, and we'll certainly be looking at the incoming data as everyone else will.
Sorry, I should have been clear. I mean, would it be possible to take a meeting off, for example, and then resume? Could you, rather than just doing at every meeting a move, go a little bit more slowly, take some gaps in between moves?
I mean, I think this is not something that the committee is thinking about or exploring in any kind of detail. In principle, though, we used to do was go every other meeting, if you remember, 25 basis points, and that was considered a fast pace. So I think a lot of options are available, and you saw what the Bank of Canada did, and they left it that they're willing to raise rates after pausing. But this is not something that the Federal Open Market Committee is on the point of deciding right now.
We're pumping a little bit for Bitcoin, by the way, guys. At 23.44.
Steve Leisman, CNBC. Mr. Chairman, the SEP has the PCE inflation rate in 2023 at 3.1%. Meanwhile, the 3-month annualized PCE is 2.1%, and you've achieved this without going to your 5.1% funds rate, which is what you have penciled in for this year. And you've also achieved it without the 1 percentage point increase in the unemployment rate, which you have penciled in for this year. I'm wondering if you've considered the idea of whether or not your understanding of the inflation dynamic may be wrong, and it's possible to achieve these things without raising rates that high, and also without the surge in unemployment. And specifically, I wonder if you might comment on the speech given by Vice Chair Lael Brainerd, who said, to the extent that inputs other than wages may have been responsible in part for important price increases for some non-housing services, an unwinding of these factors. In other words, it may not be wages, the idea that it may not require unemployment rising to get this sector of inflation under control. Thanks.
So a couple things. First, on the on the forecast, if you're right. If you take very short-term, three-month, say, measures of PCE, core PCE inflation, they're quite low right now. But that's because that's driven by significantly negative readings from goods inflation. Most forecasters would think that the significantly negative readings will be transitory, and that goods inflation will move up fairly soon back up to its longer run trend of something around 0, something like that. So a lot of forecasts would call for core PCE to go back up to 4% by the middle of the year, for example. So that's really where the sustainable level is more like at 4%. So that would suggest there's work left to do. Let's say inflation does come down much faster than we expect, which is possible. As I mentioned, obviously our policy is data dependent. We would take that into account. In terms of the core non-housing services, as I mentioned earlier, it's a very diverse sector, 6 or 7 sectors, and so sectors that represent 55 or 60% of that subsectors of that sector we think are sensitive to slack in the economy, sensitive to the labor market in a way. But some of the other sectors are not. And for example, financial services is a big sector that's really not driven by labor markets, wages. So that's why I said there are a number of things that will affect. Take restaurants, right? So clearly labor is important for restaurants, but so are food prices. And transportation services is going to be driven by fuel prices, for example. So there are lots of things in that mix that will drive inflation. I would say overall, though, my own view would be that you're not going to have a sustainable return to 2% inflation in that sector without a better balance in the labor market. And I don't know what that will require in terms of increased unemployment, your question. I do think there are a number of dimensions through which the labor market can soften. And so far, we've got, as I mentioned, in goods, we have inflation moving down without the softening in the labor market. I think most forecasters would say that unemployment will probably rise a bit from here, but I continue to think that there's a path to getting inflation back down to 2% without a really significant economic decline or a significant increase in unemployment. And that's because the setting we're in is quite different. The inflation that we originally got was very much a collision between very strong demand and hard supply constraints, not something that you really have seen in prior business cycles. And so now we see goods inflation coming down for the reasons we thought, and we understand why housing inflation will come down. And I think a story will emerge on the non-housing services sector soon enough. But I think there's ongoing disinflation, and we don't yet see weakening in the labor market. So we'll have to see.
Can we get there with 5%?
Certainly possible. Yeah, absolutely, it's possible. It's a question no one really knows. I think it's because this is not like the other business cycles in so many ways. It may well be that that it will take more slowing than we expect, than I expect, to get inflation down to 2%. But I don't. That's not my base case. My base case is that the economy can return to 2% inflation without a really significant downturn or a really big increase in unemployment. I think that's a possible outcome. I think many forecasters would say it's not the most likely outcome, but I would say there's a chance of it.
Michael.
Michael McKee from Bloomberg TV and Radio. I'd like to pick up on what you were just saying about a substantial downturn and ask, with the full weight of your tightening not in place yet, and with the progress against inflation, there's still a lot of talk about very, very slow growth going forward in 2023. And the recession indicators are all suggesting that we are going to see recession this year. So I'm wondering if you've changed your view, or you have a more nuanced view of what you think the danger to economic growth is going forward, and whether you're very close to perhaps tipping it into the wrong place, which calls for more restraint on your part?
So I do think most forecasts and my own assessment would be that growth will continue, positive growth will continue, but at a subdued pace, as it did last year. We had growth of GDP growth of 1% last year, and also final sales growth, which we think is a better indicator of about 1%. I think most forecasts and certainly my assessment would be that growth will continue at a fairly subdued level this year. There are other factors, though, that need to be considered. You will have seen that the global picture is improving a bit, and that will matter for us, potentially. The labor market remains very, very strong, and that's job creation, that's wages. As inflation does come down, sentiment will improve. You also, state and local governments are really flush these days with money, and many of them are considering tax cuts or even sending checks. So I think that's going to support. They're also spending a lot. There's a lot of spending coming in the construction pipeline, both private and public, and so that's going to support economic activity. So I think there's a good chance that those factors will help support positive growth this year, and that's my base case is that there will be positive growth this year.
Rich?
Thank you. Rich Miller from Bloomberg. First of all, how are you doing?
Fine, thanks. Fine.
Good. Second off, I think earlier on in the press conference, you said you need to see substantially more evidence of inflation coming down. Can you give us some idea of what you're thinking of? You mentioned 3 months, that we've seen 3 months in a row. Governor Waller suggested he might want to see 6 months. Is it just the inflation data, or do you have to see the labor market coming back into better balance to have that substantially more evidence metric?
I don't think there's going to be a light switch flipped or anything like that. I think it's just an accumulation of evidence. So of course we'll be looking, by the time of the March meeting, we'll have 2 more employment reports, 2 more CPI reports, and we'll be looking at those carefully, as all of us will, and we'll be asking ourselves, what are they telling us? And soon after that, we'll have another ECI wage report, which, as you know, is a report that we like because it adjusts for composition and it's very complete. And the one we got, I guess it was yesterday, was constructive. It shows wages coming down, but still at a high level. They're still at a level that's well above where they were before the pandemic. So I don't want to put a number on it in terms of months, but as the accumulated evidence comes in, it's going to be reflected in our assessment of the outlook, and that will be reflected in our policy over time. But I will say, though, it is our job to restore price stability and achieve 2% inflation for the benefit of the American public. Market participants have a very different job, and it's a fine job. It's a great job. In fact, I did that job for years, but in one form or another. But we have to deliver that, and so we are strongly resolved that we will complete this task because we think it has benefits that will support economic activity and benefit the public for many, many years.
Edward?
Thank you, Michelle. Thank you, Fed Chairman, for taking the questions. So you've talked about we had solid job growth. I'm Edward Lawrence from Fox Business, by the way. We had solid job growth, a slight falling in the increase in consumer spending. It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to 6.5% CPI inflation. Is the hard part yet to come, to go from 6.5 to 2?
I don't think we know, honestly. So we, of course, expected goods inflation to start coming down by the end of 2021. And it didn't. It didn't come down all through 22. And now it's coming down, and it's coming down pretty fast. So I would say this is not a standard business cycle where you can look at the last 10 times there was a global pandemic and we shut the economy down and Congress did what it did and we did what we did. It's unique. So I think certainty is just not appropriate here. Inflation, it's just harder to forecast inflation. It may come down faster. It may take longer to come down. And, you know, our job is to deliver inflation back to target, and we will do that. But I think we're going to be cautious about declaring victory and, you know, sending signals that we think that the game is won, because we've got a long way to go. It's the early stages of disinflation, and it's most welcome to be able to say that we are now in disinflation. But that's great, but we just see that it has to spread through the economy and that it's going to take some time. That's all.
How long do you see then the federal funds rate remaining at this elevated level?
You know, so my forecast and that of my colleagues, as you will see from the SEP, and I mean, there are many different forecasts, but generally it's a forecast of slower growth, some softening in labor market conditions, and inflation moving down steadily, but not quickly. And in that case, if the economy performs broadly in line with those expectations, it will not be appropriate to cut rates this year, to loosen policy this year. Of course, other people have forecasts with inflation coming down much faster. That's a different thing. You know, if that happens, if inflation comes down much faster, you know, then we'll be seeing that, and it will be incorporated into our thinking about policy.
Simon.
Look at all those hands, guys.
Thank
So
you,
many
Chair Powell.
questions.
Simon Rabinovich with The Economist. May I ask a further question about the language around ongoing increases? That, of course, implies at least 2 further rate rises. If you look at Fed Fund futures pricing, the implication is that you'll raise rates one more time and then pause. Are you concerned about that divergence, or do you think if everything breaks right, is that a plausible outcome?
I'm not particularly concerned about the divergence, no, because it is largely due to the market's expectation that inflation will move down more quickly. I think that's the bigger part of that. So again, as I just mentioned, our forecasts, different participants have different forecasts, but generally those forecasts are for continued subdued growth, some softening in the labor market, but not a recession, and we have inflation moving down. Into somewhere in the mid-3s or maybe lower than that this year. We'll update that in March, but that's what we thought in December. Markets are past that. They show inflation coming down, in some cases, much quicker than that. So we'll just have to see. And we have a different view, it's a different forecast, really. Given our outlook, I don't see us cutting rates this year if our outlook turns true. As I mentioned just now, if we do see inflation coming down much more quickly, that'll play into our policy setting, of course.
Scott.
Hi, Chair Powell. Scott Horsley from NPR. One of the changes in the statement this month is that the committee is no longer listing public health as among the data points you'll consider in assessing conditions. What should we make of that? Does the Federal Reserve no longer see the pandemic as weighing on the economy?
That's the general sense of it. Look, I personally understand well that COVID is still out there, but that it's no longer playing an important role in our economy. And, we kept that statement in there for quite a while, and I think we knew we would take it out at some point. There's never a perfect time, but we thought that, people are handling it better, and the economy and the society are handling it better now. It doesn't really need to be in the Fed's monthly or post-meeting statement as an ongoing economic risk, as opposed to a health issue.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. I wanted to go back to another thing that Fed Vice Chair Lael Brainard said recently. She said she doesn't see signs of a wage price spiral. And I'm wondering if you agree with that.
I do. Yeah, I do. You don't see that yet, but the whole point is, once you see it, you have a serious problem. That means that effectively, in people's decision-making, inflation has become a really salient issue. And once that happens, that's what we can't allow to happen. And so that's why we worry that the longer we're at this and the longer people are talking about inflation all day long, every day, the more risk of something like that. But no, there's not much. It's more of a risk. It always has been more of a risk than anything else. By the way, I think it's becoming less salient, and people are. We pick that up in conversations, and I've seen some data too that show people are, gradually, they're glad that inflation's coming down. People really don't like inflation. And as we see it coming down, that could also add a boost to economic activity. You look at the sentiment surveys now, and they're very, very low. With 3.5% unemployment and, high wage increases nominally by historical standards, why can that be? It has to be inflation, right? So I think once inflation is seen to be coming down in coming months, even, you will also see a boost to sentiment, I hope.
So that's what you're looking at most closely is consumer expectations.
That's at the very heart. It's consumers and businesses. Essentially, we believe that expectations of future inflation are a very important part of the process of creating inflation. That's a sort of a bedrock belief. In one way or another, it has to be. We think it's important. And in this case, I would say the risk 8 months ago or so, longer-term inflation expectations had moved up. We moved quite vigorously last year. Expectations seem to be well anchored, including at the shorter end now, not just the longer end. So it's, and I think that's very reassuring. I think, the markets have decided and the public has decided that inflation is going to come back down to 2%, and it's just a matter of us following through. That's immeasurably helpful to the process of getting inflation down. The fact that people now do generally believe that it will come down, that'll be part of the process of getting it down, and it's a very positive thing.
Greg.
Thank you, Chair Powell. Greg Ropp from Market Watch. In the minutes of the December meeting, there was a couple sentences that struck people as important. When the committee said participants talked about this unwarranted easing of financial conditions was a risk, and it would make your life harder to bring inflation down. I haven't heard you talk much about that today or in the statement, so I was wondering, has that concern eased among members, or is that still something you're concerned about? Thank you.
I would put it this way. It's something that we monitor carefully. Financial conditions didn't really change much from the December meeting to now. They mostly went sideways or up and down, but came out in roughly the same place. It's important that the markets do reflect the tightening that we're putting in place. As we've discussed a couple times here, there's a difference in perspective by some market measures on how fast inflation will come down. We're just going to have to see. I'm not going to try to persuade people to have a different forecast. But our forecast is that it will take some time and some patience, and that we'll need to keep rates higher for longer. But we'll see.
Go to Brendan for the last question.
Hi, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask if the Fed takes into account at all the debt ceiling when it comes to quantitative tightening, given the fact that rapid or faster quantitative tightening could bring us closer, faster to that drop-dead debt ceiling deadline. Could it play an effect as we get closer to that drop-dead deadline this summer?
It's very hard to think about all the different possible ramifications, and I think the answer is basically I don't think there's likely to be any important interaction between the two, because I believe Congress will wind up acting, and as it will and must in the end, to raise the debt ceiling in a way that doesn't risk the progress we're making against inflation and the economy and the financial sector. I believe that will happen. I believe it will happen. We of course will monitor money market conditions carefully as the process moves on. For example, the Treasury General account will shrink down and then it will grow back up, and we understand there'll be lots of flows between there and the overnight repo facility and reserves. We understand all that. We're watching it carefully. We'll just be monitoring it. Thank you very much.
So finally, it is over. So yeah, that was pretty crazy. I'm not going to say it is actually against any of the expectations that we already had. It's really not too surprising, whatever he said. I've been kind of scrolling here on my phone whilst he's speaking as well about what other analysts are saying about his words, but generally speaking, it was following the expectation. I had a couple of notes, but even those are not that interesting. We talked just now about the debt ceiling. He just at the start said, hey, the job market is still looking pretty strong. What from you guys? Do you guys think he said anything really like strange that was surprising to all of us? I think it feels like this is most of the time, right? And these people asking the questions are sometimes so interesting. It feels like a lot of these guys are indeed career economics, just caring about the underlying principles of things and not really about the results or what they might bring. More about the theory about it all. It was okay. It was fine. Nothing too special, nothing too crazy. And yeah, he's basically saying we're not even going for like a soft landing even. It's like even a better case of just, hey, we're going to continue on with low GDP growth in time. Everything's still looking pretty solid. Let's continue on this like trajectory of kind of like sideways with a slight upward bias momentum. And that's basically what he said. But yeah, guys, that was it for today's stream. Hopefully you guys all enjoyed it. If you did, make sure you subscribe to the channel. I'm going to be sharing with you guys a lot of cool tips on how to make money with crypto, I guess, because that's, I think, one of the things I can surely teach you guys a lot about. On the opposite side, I also will share crypto news every single day. And if you guys, let me know in the comments down below what crypto you're excited about. I will always take a look at the crypto and potentially talk about it over on YouTube as well if there's some exciting news or a good update. One of the things that's going to be coming out soon is my top 5 altcoins for for February video. So if you guys want my top 5 picks for February, make sure you tune into the channel by pressing that notification bell, and I'll be seeing you guys shortly in another stream. So hopefully you guys all enjoyed it. See you guys later, guys. So amazing. You guys just stopped on by. You guys are awesome.